Tom O'Connor, you specialize in healthcare technology M&A. But before we get started on healthcare, what's the overall environment like right now for M&A? Because we're seeing some huge deals.
Right, absolutely. The huge deals are a good indication of how robust the market is today. I mean, it's been a 3-year cycle in M&A. There's a ton of money from corporates out there on their balance sheets. They've cleaned up their debt. They're all looking to grow through revenue growth, and the easiest way to grow is through acquiring companies that move the needle. On the flip side, you have private equity firms with $1 trillion on the sidelines looking to grow and invest, and they have also the credit markets have been very forgiving with low interest rates at 0 from the Fed. They can borrow at 3 to 6 times EBITDA to invest in businesses. So it's a fantastic time to sell a business, and that's why you continue to see deals continue to happen in the marketplace.
Now let's drill down to healthcare.
Right.
It seems like between Obamacare and the rise in technology, it's a great time to be buying or selling a company or involved in this space.
Right. Well, it's actually a great time to be a seller in healthcare right now. If you talk to all the people on the buy side, they'll tell you it's actually a tough time to be a buyer because the multiples are so high. I mean, all the structural changes going on in healthcare, it's going through a big change. It's going through a rapid catch-up from paper to digital, but also, as you mentioned, the ACA and all the regulatory environments today is pushing change in healthcare from the Americans getting older to people getting out of hospitals, to lower cost, better care, and more access is all driving innovation in healthcare. It's really happening on the software and technology side today. And actually, most of the innovation is happening on the entrepreneurial level when these companies get to 15, 20, 30, 40 million of revenue growth and attractive EBITDA margins and probably a 20 to 30% revenue growth. They become attractive targets for both strategic and financial buyers.
Do you think a lot of the low-hanging fruit has been picked off because healthcare has led the market for a few years now?
That's right. I would say you're not seeing, even though you're reading the paper of a couple of very large deals, Aetna and Anthem type deals, most of the innovation is happening at the small, lower mid-market level where the innovation is happening. As those companies grow to a certain size, they may not make the paper, but there's plenty of deals. But it's actually hard to, what we call a unicorn. It's hard to find a privately held business without institutional money at a certain scale, growing at a certain rate that's willing to be acquired. That's what's tough to find today.
Now, the healthcare sector of the S&P was down 10% in the third quarter.
Right.
Really took a smacking. Will this lead the market lower in terms of M&A, or will this create one big flurry to get the deal done before all the air leaves the balloon?
Right. Well, healthcare is 17% of GDP, and all the macro trends are positive. So it's almost a recession-proof industry. Certain niches go up and down, but healthcare itself is only going to be more important and become a bigger part of the GDP going forward. So you continue to see deals in a lot of niches across the healthcare continuum.
All right, and then finally, what does that mean for Wall Street? I mean, it seems like that's a great area for Wall Street banks to build up these particular parts of their firm.
I think so. I think Wall Street continues to advise on the sell side and buy side of healthcare. You'll see more and more firms specialize in healthcare, have special M&A bankers, because you really need to know the space, understand the drivers. So I think for Wall Street, it's all good. But the thing, I think it's actually better for boutiques like ours because most of the deal flow is in the lower mid-market, where it's not going to make the front page of the Journal, owned by entrepreneurs who need advice. And those are small boutiques, and you'll see more boutiques in the market today where it's just advice. They don't need financing. They don't need capital. They need sage, independent advice when they're selling their business.
All right, well, thanks a lot, Tom.
Sure, thank you.
And thank you for watching The Street.